This is our Forex blog for May 18th, 2012, and we're going to showcase a new feature we're putting in. It should be released soon. You can watch May 17th, 2012 Forex blog for more details on this. But in a nutshell, it allows you to have a quote sheet or a hot list with your symbols on it, and then sort it. And when you sort it, it will put the strongest currencies on the top, weakest ones on the bottom. That's the way I like to have it. You know, you can also have weakest on the top, strongest on the bottom, whatever makes most sense to you, but I like to see the strong ones on the top, weakest on the bottom, and then you can automatically focus on the best currencies to be in. I have the 60-minute trend right here, what percentage of currencies are trending up or down on that time frame as a sort order. And for this to work, you have to hide the layer where these phantom charts are on. We've always had the ability to send charts and, in this case, the currency meter histograms to different positions, position 1, 2, 3, 4, 5, 6, 7, 8. In order for this to work, you actually have to hide the layer that all of those are running on. These blank charts are the placeholders, and this is a new option right here. You set hot list group option to A, you set hot list rank option to 1 for this first one. This one would be number 2, see, number 3, and so forth. And because these charts in the blank placeholders are linked up, when I then go in and sort this list, I'm going to make it bigger so I can grab the edge of it and get it back. If I want to see the strongest ones on the top, oops, hold on a second, there we go. The Swiss and the Euro are the two strongest, then the Yen. The weakest are the Australian and New Zealand. And I also put in a new column here that to allow me to order this in the way that it makes most sense to me. If I want to normally look at the currency meter like we've had it for years, dollar, then the yen, euro, pound, Swiss cat, Australian, New Zealand, and so forth. So now I have it in the right order. This makes trading very easy. These are the three strongest currencies on the hourly trend. The Swiss, the euro, the yen. The weakest one is the New Zealand. Second one is the Australian. And the real-time histogram on the top shows the statistical strength or weakness comparing all these currencies to every other one. It's made up of 5 different tools, just like it has been for the last 3 or 4 months we've had it out. 3 of them measure the direction, percentage of, in this case, Swiss pairs moving up or down, and then two of our statistical tools measure the intensity of direction. So anything at and above the 80 level is showing strength. The more time frames that are going in your way, the better. This is real time. This is a 15-minute trend, hourly trend, daily, weekly, monthly. So in this case, the Swiss has a weekly, monthly trend that's down. The weekly trend just shifted to only slightly down and actually up a little bit before 12. Real-time trends change first, then the 15, then the hourly, then the daily, then the weekly, and then the monthly most of the time. There are some rare exceptions to that, but always be aware that the trends change first here. You don't know if a trend that's starting to go up is going to change the weekly and monthly, but you can see the daily changed up from yesterday at around noon, and it's been going up and getting stronger ever since. So basically, in a nutshell, especially when you're looking at this earlier, around 8:30 right here, this is the weakest. You want to sell the New Zealand Swiss. Now, this is a chart that I don't normally leave running, so I will bring up a New Zealand Swiss chart just so you can see it. Layer 7, which is the one that's visible right here. And from 8:30 onward, you really want to sell the New Zealand Swiss. So here's 8:30. It drops, looks like 10 pips. 10 pips. Nice little sideways rectangle pattern right here that drops 10, 20, 30 or so pips. This was one of the higher probability trades. The euro was also strong, so you can buy the strong euro versus New Zealand from 8:30 onward. And you can see it went up 25, 50, 75, 100, 125, 140 pips. I mean, it's outrageous. And a lot of people prefer range-based charts than regular charts. So you might put, let's first change this to only 2 days because you have to download tick data for this. Change it to 2, and we'll put in 6 pips per bar, 6R for ticks per bar. It's going to download the tick data, and it's going to show us the 6 pips per bar chart. There's a lot of different patterns you can find using this kind of pattern. And you can see from 8:30 on, buy, it just keeps going up. And one of the new tools we're working on, and I haven't decided what I'm going to call it yet, so don't worry about the name I'm using right now. Shows buy and sell signals on there. So after 8:30, you had this nice little buy right here. And in some cases, I'm looking for multiple bar pullbacks. If it goes up statistically too much, I don't label them. More than likely, this is above the 2.0 containment band, which I consider a relatively risky place to look for buys. And when the market moves statistically too far, we actually start looking for counter trend sells. So these are excellent places. In some cases, like yesterday and today with this one, it moved up too much to give this pullback right here a buy. Normally after a 3 or 4 bar pullback, the first bar that goes green is a good place to get in. You can always draw your fibs on there. Most of the time the fib targets are a great place to get out of your trades here. Let's take a look at the New Zealand Swiss. So I did a pretty good job of finding the low here, the sell point here, and then it's gone down statistically too much. So even though the trend is clearly down, we're starting to show some counter trend signals. If you're looking to buy a currency, you don't want to be buying the absolute weakest one. So you might want to ignore this. But what I have found is after the first counter trend signal, if you draw your fibs on that last wave, if it can make its way down to the fib target down there, which might be another 15, 20 pips down, that is an area where you can scale into a trade and usually make 20, 30 pips off the bounce. I won't buy the first counter trend signal, but I will look at the last swing, and if it goes to the next fib target down, usually you're going to get a big bounce. Just count the waves down. 1, 2, went sideways. 3, kind of sideways a little bit. 4. The next wave down would be the 5th wave. You're almost always going to get a 20 to 30 or sometimes 50 pip bounce off of that. Let's reorder this and look at it in terms of the order that I like most. You have the dollar and yen pairs on the top, and then the other pairs on the bottom. Between the dollar and the yen was clearly stronger today, especially during the U.S. session. The New Zealand was extremely weak, as was the Australian. So let's take a look at selling the New Zealand yen. And you might want to use a 5 pips per bar chart. I put 6 on here. Typically, the recent volatility has been a little bit less on the 6-minute chart. You can see that some of these counter trend signals, as this thing is going up, because it's so weak on the weekly and monthly trend, I'm actually showing counter trend signals as it goes up. Because it's so weak on the longer term chart, if you get certain patterns, it's very likely to reverse. Now here's the first counter trend pattern. This kind of solidifies what I was referring to before. Draw your fibs off of this, and most of the time at the next fib target up is where the end of the move is going to be. So just like I showed in the New Zealand Swiss, looking for the next fib level down to buy, this is a perfect example of that. The first counter trend signal, as it was going up, you're only going to get counter trend signals if it's gone up too much or if it's extremely weak on the weekly and monthly trend like the New Zealand yen is. So these fib targets right here are a great place to get in to big positions. If you have a bigger account, you might want to even get into 10, 20 lot positions right here at 30. It pulls back 20 pips, and that's a $2,000 profit on that trade in a very short amount of time. And if you miss that first, counter trend signals right here, once it starts trending down, you have this entry here, here, and here, which all worked. And this kind of solidifies how we're going to use these signals. You don't want to just look at 12 or up to 28 of the major pairs and take every signal you see. You want to cherry pick and use our currency meter to find the strongest and weakest ones, and then use these signals for entry. And just because you get a signal doesn't mean you want to take the trade. This last or 3 signals ago right here, when you get a signal, your entry is when it goes 1 pip below the low. It's 60.07. If the next bar opens and goes up, you don't get in, and therefore you don't have a loss. So in this trade right here, you would have put your entry 1 pip underneath there, your stops above the high, and it kind of went sideways. More than likely, I would have got out of this trade myself with a small profit, break even, 3 pip loss. Waited for the next entry, got in here, made money, got in here, made money, got in here, made money. And the first one, as this thing was trending up, I would have waited for the fib area right here. And even though it may not have even, it may have given a signal here. Some signals show up off the top of the chart. So it's, if you add a little padding to the top, you can see when that's the case. So it did give a counter trend signal right here that we didn't see. That's what I expected, because it went up 4 bars in a row with a counter trend bar and a wick, which are really high probability reversals, especially if the weekly and monthly trend's down. So like I was saying before, this is a trade I would have taken, especially seeing the counter trend signal right here, and pull back about 8 or 9 pips, short again. Once this thing breaks down right here, pull back 15 or 20 pips. So I would have already been in this trade, so therefore I wouldn't have taken that trade. But more than likely, as this market kind of went sideways right here, I would have gotten out. I may not have got back into this trade here, but once I got that signal right here, I'd be short. And once you're in a trade and it's going your way, always draw your fibs. Most of the time, the biggest profit you're going to get is the fib target. So if you were short this one right here, because it's already gone down, it's gone down. This is the third wave down. When it hits that fib target, if it can't shoot through there, you want to get out. So more than likely, I would have got out of this one right here at 70. I would have been short at 80. Very small profit on that one. And from the previous trade, a lot better profit, short at 08. In this case, look, it closed right at the fib target. You want to see what happens on the next bar, and it goes lower. Usually it's not going to go below 77. So when this next bar, whether it came down immediately or went up a little bit, I would have been out somewhere in this bar. So we'll just say at 83. This trade right here, we made 23 pips on. So, the sooner you can catch a trend and get on it, the better. Once the currency's already gone down, 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 your likely number of pips profit goes down, down, down as well. If you can catch a trade right at the high of the day, anticipating, now this is one, if I were to take this and went down, went up, and went down, this is a reversal pattern, I would have got out because the trend is still up. An uptrend is a series of higher highs and lower and higher lows. So you got higher highs, this low is obviously higher than these, higher highs, higher lows, higher highs, higher lows, not a higher high. First real sign, double top, and it's at the fib target, remember, that I drew before, very likely reversal because the New Zealand yen is so weak on the weekly and monthly trend.